I think the fact that I show gold coins at all is a pretty good signal that I'm not a financial advisor. But flashing a coin with a couple of mythological beasts that eat gold and silver and can't poop, well, that should really drive it home. Okay, so the price of gold and silver has been in a lull for a few months now. We even had Steve Forbes describe gold as being dead in the water. Now, he went on to say that you really need to buy gold, and I don't know how much stock I put into what Forbes says about gold, but I like that dead in the water description because there just isn't a lot of wind behind it right now. And whether that's because of bond yields or something else, it's really hard to say for sure. But on top of that, a lot of sources have been calling for a market crash next month. And if you're watching this in the future, that's April of 2021. I'm just going to stop here for a minute because before we go on, we need to be really clear on the fact that absolutely nobody can predict the market. I'm certainly not trying personally. I'm just paying attention to a number of sources who think that we're going to see a crash or a correction in the markets. Now, crash means 10% or more. And I'm not making this video to get people concerned about a crash. I won't tell you that you need to be stacking this or need to be stacking that, or that we're on the verge of any kind of made-up reset. Now, even though I would agree that a lot of assets seem to be inside these ever-inflating bubbles, I'm the last person who's going to try to scare you for a little extra attention. I just thought it was worth looking at what that might mean for the average person buying gold or silver and doing it on a dollar cost average basis. So we've seen what happens to gold and silver in a market crash. Basically, we get a wide sell-off, and that brings down the price of both metals until we kind of find a bottom in the market. Now, if I was reading you a Bloomberg article, it would say something about covering margins. And I don't think the technical reason for the sell-off really matters, though. I'm not going to act like I'm a technical analyst by reading something back to you. It's what happens after that initial crash that's interesting because we typically see a bounce. And that's a big part of why I'm not in a huge hurry to buy gold with high premiums right now. I just won't be surprised if gold drops further than it already is. So in typical circumstances, where we weren't already seeing availability issues and high premiums, it would seem like a really good reason to hold on to some cash and get ready to buy. But based on what's actually happening, I'm not sure a drop in spot price will ever really result in lower actual prices of physical metals. At least it hasn't in the last few months, and again, just to be clear, what do I know? I'm not trying to predict the market, and I'm really only using recent history as a basis for that guess on what could happen with premiums. I know there have been several points recently where the spot price has dropped significantly, but the price on gold has actually gone up because the bullion dealers were fast enough in raising their premiums that we didn't actually see a drop at all. And this might be a pretty quick drop. For what it's worth, a lot of those same sources that were pointing to an April crash are actually also looking at late April as a probable turning point on the price of gold. And just as a little bit of commentary here, when I think of a crash, I don't think of 2 or 3 weeks of a drop followed by a pivot to the upside. I mean, that's a blip. Nobody's getting hurt in that. So if anyone on YouTube tells you the price of gold is about to crash or that it's crashing, when the price has a blip like that, they're playing you. They don't care one bit about you. They just want their ever-inflating clicks because they have their own little bubble. Anyway. My plan is to just keep watching for the best deal and pick up gold when it's convenient. And like I said, I'm not going to be surprised if the spot price of gold drops. And I understand the emotional impact that has on someone who bought heavy at high prices. But you don't lose unless you sell. And knowing that absolutely nobody can predict the markets, dollar cost averaging over many years is going to take the edge off of those highs. And we might be on the verge of that turnaround in spot price where prices are going to shoot up, but they could stay where they are right now as well. And I don't think that that's based on any kind of manipulation or long-term hemorrhage to something like cryptocurrency. I think it's a lot more of just being a natural cycle. Now, Powell made a comment yesterday about Bitcoin being a substitute for gold rather than for the dollar. And Powell, of course, is a lot smarter than I am, but I think it's a bit of a dumb thing to say. I think it's just a bit of a misdirection to take the attention away from Bitcoin being a substitute for the US dollar. And really the only reason I bring that up is to say that I think that gold has a lot more to do in the second half of the year. Again, that's a personal opinion, but I don't really see it taking a back seat to Bitcoin. They just aren't even on the same road in my mind. And even though I say I think gold has more to do in the second half of the year, I'm still going to be dollar cost averaging throughout the year. So if we do see a dump in April and the start of a run in May, well, I guess my standard purchases are going to average themselves out. And then my discretionary purchases, hopefully, are going to let me get a hold of a little bit more when the price is low and then slow me down when the price is high. For now, I'm really just hoping for two things. First, I'm hoping we don't get that crash at all, of course. Now, maybe we're due for a correction, and that wouldn't surprise me. But for obvious reasons, I'd rather not see a larger crash. Now, it always surprises me when people in the community talk about things that would be a symptom of economic ruin. They do that without even understanding that having that little bit of silver isn't going to offset the actual problem. It's going to help you a little bit, and good for you for having it, but it's still going to be a net loss. Now, the other thing is that I'm hoping the premiums come back to normal. Like I just mentioned, a drop in spot price next month probably wouldn't allow anyone to get a hold of less expensive gold. Dealers have been buying at higher spot prices, and then in order to get inventory, they've been buying for higher premiums. They're not just going to turn around and sell all that for a loss. They've also seen that people are willing to pay these stupid premiums, so I imagine we're months away from any of that getting back to normal. And if we do see that drop in prices, we're likely going to be looking at something like we saw last March, when really nobody was able to get a hold of anything at those prices. It's probably even going to be worse. So here's what I'm planning to do if we see that crash. I'm planning to keep buying at a dollar cost average. Basically what I'm saying is I'm going to try to be patient and not do anything dumb. I think dollar cost averaging has as much validity in gold as it does in the stock market, or any market really. I'm going to continue avoiding ridiculous premiums as much as I can. I'm not going to let that higher premium drive me to make a bad decision and buy something that I wouldn't normally consider. Now, I've mentioned that I'm looking at Canadian Maple Leafs and Britannias if I can't find a decent buy on Eagles or Buffaloes. But I'm also not going to go crazy and buy whatever I can find for 5%. I'm still trying to find the coins that I would at least consider in normal times. I've always considered Canadian Maple Leafs to be a great purchase, and I think the Britannias at 5% have a lot of good things going for them as well. But I'm always looking for those first choices as well, and I actually spotted a random year Buffalo on SD Bullion for $20 more than a Britannia the other day. And personally, I'm happy enough paying that extra $20 for my first choice. I've been able to find decent deals lately, and it's hard to find those if you're in a back up the truck mentality. So if we do see some bad things happen in the market, and who knows, we've got this whole Memorial Day to Labor Day time frame coming that tends to be a little softer for the stock market. I just don't want to be making bad decisions that make it worse. And I plan to keep on making standard purchases and not get caught in some kind of buying spree. Definitely not because some random YouTuber is calling for a raid, or any of the popular doom and gloom regurgitation about a great reset or whatever. I find those videos funny. It's like that movie Multiplicity, where every time Michael Keaton gets cloned, he gets dumber. I mean, the same thing happens when somebody repeats somebody else's bit of doom and gloom advice. Anyway, if a crash does hit, it's probably likely that that's going to act as something of a runway for gold. So if you're buying gold or silver as a bit of insurance against a bubble market, good for you. I think the time to prepare for those types of things is always. That works a lot better than preparing while it's happening, or on the verge of somebody's prediction that it's happening. And honestly, I get caught up in some of those predictions, for the record. I did grab that Buffalo, by the way. I think it worked out to 6% premium, and it's going to take a minute to get to me, but that's the kind of thing you can find with a little bit of patience. I know that when I get in a rush personally, I either spend more than I need to, or I buy something that I will regret later. Just something to think about if we see that April shakeup. It's the difference between preparing and reacting, I guess. And I think that's going to do it today, so I hope you're doing well. Let me know in the comments what you're up to, and while you're there, if you don't mind, hit the like button. That always helps get the word out. Either way though, thank you again for watching. I always appreciate your time. Take care.